Thank you, Marlon, and Heidi ho, everyone. Welcome aboard. It is another week of Trading Buddies, and thank you for being our Trading Buddies for the day, this Monday, the 10th of the 10th, 2022. My goodness gracious. We'll soon be talking about Christmas, right? Oh, we're already talking about Christmas, are we? Okay, got your presents already organised? Fantastic. All right, we can work on affording some, eh? We'll get some money in the bank this week, hopefully. Last week, very uneventful for me. Was it last week? I think I took a loser on the Monday, maybe. And two other trades didn't get even in the market. The pound versus the dollar trade. What do we have? One winner, two losers, one break even. Slight winner on that one. Remembering, of course, that we can have one winner out of three, and we do win money on this at the moment, the way we're doing it. So let's go to it and see if we can find a trade for the pound versus the dollar. Those of you joining us for the first time, welcome, and thank you for being our trading buddy for the day. You, of course, are welcome to participate at any stage you so choose by either putting a question in the chat. You can come online. You can join us on camera. You can show us your stuff or ask questions, whatever you want. It's your show. All right. Now, those of you, again, who are here for the first time and don't know what the heck I'm about to do, I'm looking to trade the pound versus the US dollar at London Open. And to achieve that, what we attempt to do is find the range of Asia session. Now, the range of Asia session begins here at the 2 o'clock candle, and of course we take into consideration the current 1 hour candle as well. So the range between those two times is currently, here's the high and here's the low. The low may get a little bit different if this candle, obviously in the next 2 or 3 minutes, closes below the bottom of that range. But at the moment, the bottom of the range is 110.55 and the top of the range is 111.12. What we then do is draw a line in the middle. So we find our midpoint of that range, which today at the moment is 1.10835. So halfway between the high and the low. Now, if when London opens and that range hasn't changed, the candle, or price rather, is below the midpoint, we will buy at the midpoint, take our first profit here, which is a bit of a misnomer. We don't actually put money in the bank. We just move our stops to entry, and we set a target 2.5 times whatever the risk is. So with a little over a minute to go, it looks like we will be trading long at the midpoint. We will be putting our stop loss at the bottom of the range. And as I said, our TP1 or our stops to break even will occur if we hit 111.12. Now, if price was above the monthly pivot and close to the midpoint, I would not be taking this trade at all, because near to the midpoint is not the place we want to be. The theory behind this actual trade is that we want to go in the opposite direction of momentum. So momentum at the moment is clearly to the downside off that reversal bar. So what I'm saying is, well and good, if price does indeed go in that direction, we won't be taken into the trade. However, if the sellers aren't strong enough, then the buyers will take over. They'll take over around here somewhere, and they should drive us up to at least the daily pivot. That's the theory. So let's hope it can play out. Right, we're getting close to the open of London session. And when we do, as I say, if price is above the monthly pivot, I won't be taking the trade. But if it closes as is, which appears likely, we will place that order. So I'll just get ready for that. I'll use the automated EA. And bingo, there we go. That's the new handle. So as always, guys, this is in test mode. So very, very, very small amount of money placed on the table here. The entry is at 110.835, as I said, 1.10835. Stop loss is at 1.1055. and get rid of take profit pips. We'll move stops to entry at TP1, which will be 111.12. 1.1112. We'll take nothing off the table, but we'll move our stops to entry. Okay, TP2, we won't worry about. We'll set a target when I've got this order in the market. Okay, and so it is. We'll get rid of these lines now. 110.835. Yeah, we got that right. I can't see any lines on my chart. That's why I'm questioning it. Stop loss 29, TP1 29. Yeah, all good. Okay, now target. Our target is 2.5 times our risk. Why? Because we consider that to be the sweet spot on this particular scenario. So over a series of, I don't know, actually I sat down for, what, 2 beers, maybe 3 beers, and went backwards in time and discovered that 5 times was great, 8 times was great, but the median was around about the 2.5 to 1 time. So that's why we're using that as the target. So the 29 pips that we're risking, 2.5 times that, 58 plus 14.5 is 72.5. Let's go with 72. 1.1184 will be the target. And there it is. So if we do get taken in, first things first, we hit that level, we move our stops to entry, do nothing else. Then we wait till we hit target and close the trade. Very, very simple. Do I like that trade this morning in terms of, well, I'd have to say the daily pivot's going to be an issue. But if we get through the daily pivot, then the weekly pivot probably becomes a bit of a magnet for us. In terms of can it go that far? Well, it's a very tight range. And if we look at 100% on that, whoa, that wasn't meant to happen. There you go. Oh, no, wrong. There you go. We look at 100% on that, we don't quite get to our target. So that might be worth keeping in mind if we do get there. But that's not what we're using as a parameter at the moment. It is still 2.5 to 1. Righto, that's the pound versus the US dollar. What else have we got on the watch list this week? Well, I've got to say there were something like 14 weekly game changer bars. That is, those of you who don't know what I'm talking about, better known as a key reversal bar. Oh, you don't know what a key reversal bar is? Okay, let's address a key reversal bar. Key reversal bar is, well, candle, call it what you want, is a candle whose high is higher than the previous candle and which closes on or near its low. So that qualifies, right? Higher than the previous, closed on or near its low, and that is a key reversal bar. And as you can see, that worked very well. Going the other way, a low whose low is lower than the previous bar and closes on or near its high. Also a key reversal bar, and once again, as you can see, worked very well for a short period of time. But if you've got your targets in place, then happy days. So that's a key reversal bar. It's what I call a game changer bar. Now, like everything in trading, nothing is in isolation. You can't just rely on that candle and say, okay, I'm trading it short because it's a key reversal bar. We have been triggered by the look of that into the pound. We'll see how that goes. You need to have context around that. So on a weekly chart, really what you need is a whole bunch of things. But the very, very minimum that you would need on a weekly bar or a weekly chart is a big picture scenario. What's this, the pound? No, that's Aussie CAD. Sorry, I haven't got an Aussie CAD chart. Let's make one. And I'll show you what I'm talking about. Aussie versus the Swiss franc, Aussie versus the CAD. There we go. Okay, so weekly chart is telling me that I don't have a game changer bar on that one. Let's go with Aussie. What's the first one? Aussie Swiss, sorry. Aussie Swissy should be that one. We'll drag that on. There we go. So the weekly chart is telling me that I've got a game changer bar. Again, higher than the previous high, closed on or near its low. Now, it doesn't matter what color the bar is. It doesn't matter what color the candle is. If it's near its low, it's near its low. Simple as that. And the context around which I would like to trade that is many-fold. Let's call it 3 or 4-fold. But the very first thing I need to see is we are trading with the big boss. What's the big boss? The big boss is what the heck is the chart telling me? What potential direction do we have in terms of the overall? So the primary trend, it may be primary momentum, but to my mind, it is actually a chart pattern. So what is governing this chart? Have we got an inverted head and shoulders there? Yes, we do. Have we broken the neckline? No, we haven't. In fact, we've broken the shoulders. So what do I see? I see this big head and shoulders sitting here, and I see a downtrend. And every time I see a game changer bar and a downtrend off that, I'm going to want to sell it. Game changer bar, sell. 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 They're everywhere. Game changer bar, sell. And here's the latest game changer bar, sell. So we've got another one that's suggesting on the monthly chart, right? So we're suggesting that the downside is the best side. And for that reason, I'm actually in agreement with that candle. But I do have an issue. This market is oversold. And I don't want to be selling into an oversold market. How do I know it's oversold? Well, 1, 2, 3, 4, and currently the 5th, if you like, out of the 6 weeks that we've seen have been negative. That's unusual. Doesn't happen too often. And if you want to go a little bit further than that, there's 100 different ways to go about it. But this level here was broken, or this range was broken, went to here, came back, broke this range, measured the distance from there, measured the distance from there. That's what's happening, right? It's typical, if you like. The market's prepared to accept that amount of movement. Is it prepared to accept more? Maybe. But is the probability to the downside right now? In my opinion, no. So I've got to wait here until I get a decent pullback. You might say that was a decent pullback, the candle in itself, and I'd have to agree with you. It is a pullback, but it's a very, very brief one over a couple of days. I want to see something better than that. I want to see this level here or even this level here retested before I look to go short. So the short answer to do I want to trade this short is no. And I think that's where I'll end this little lesson, because it's very early in the show and we've got a lot to get through, as always. What am I looking for? So the weekly game changer bars are exactly that. And I didn't see anything outside of 2 this week that I really agree with. And one of them was Aussie versus the yen. We have a look at the Aussie yen on the weekly on the weekly chart. Let me get rid of that order. It's distracting. We see exactly what I was talking about before. It is a game changer bar, has closed below the pennant here, triangle, call it whatever you want. The one thing, or 2 things I don't like about it. One is that bar there is suggesting that the market's looking to go short. And as a bit of a contrarian trader, that doesn't suit my eye. If prices close above that trend line or trade line, I would be far more interested, because it means that price has to work hard to get through that level. And if it does, it's probably got momentum. There's already momentum there from the previous week, and we've got a strong support level dead ahead. So to my mind, this is not the best place to get short here. The market's disagreeing with me at the moment, and that happens often. But I'm more than happy to wait for this to come back here. I want to sell this on a green bar, not on a red bar. And the other was EuroCAD. Now EuroCAD, I think I've even placed an order on EuroCAD. Yes, I have. Okay, let me go through this one. Now, EuroCAD intrinsically, I'm an absolute bear and have been for the longest time. In fact, I was in this trade short for nearly 12 months last year. I got out. Why did I get out? Got no idea. Well, the trading stock got hit. That's why I got out. But just like gravity going the other direction will pull the market down, so too when it hits a support level, it will bounce off it. And I think that's probably where we currently are with EuroCAD. I was talking to Ash, and I'll bring Ash in a minute when I'm finished this one. We were looking at the commitment of traders data last week, and it was very much a case of the institutional big traders were getting out of the CAD, which is interesting. And we have had a few phases here, 1, 2, 3, maybe even 4 phases. So I'm looking for this to be a bounce point. I don't know that there's too much in it, to be fair. That's the monthly chart, suggesting there's probably a false break of this level in play. Weekly chart is telling me that we've broken resistance with the previous week's bar, which was a game changer bar, I'll hasten to add. And then we got this retest of that level, which is more than that level, if you like, because it's the previous range. It's come back inside the previous range and retested the bottom of that range. That interests me. And I do believe that if the sellers are in control, they'll drive price back and take this candle out and test the lows. If, however, that's not the case, I can totally see them going back to the top of this range, which coincides with my trend line here, which provides me with a confluence area as a potential target for my first profit. That's why I think this is tradable. Do I think it's going to reverse and go a heck of a long way? No, I don't. But the next level is probably up here somewhere, which gives us, 3 and 4 to 1 by the time we get there. So I'm more than happy to do that. We can get some money in the bank here, get safe. And if it does break through this trend line and go to the next target level, then happy days, we'll make some money. That's the basis of the trade. And it is, as I say, against the weekly game changer, which is suggesting that we go short. Not in agreement with that per se. Intrinsically, yes, or fundamentally, yes, long term. But I think there's a short term run on here, and perhaps we can pick it up early. That is the reason for the trade. There's 2 more on my watch list. One is Kiwi CAD, because it has broken the bottom of this range here. Now, 2 things to take note of. One is, if we get the retest here on a daily bar, on a daily chart, without coming back inside the range, then potential for this to go short is enhanced. However, if we do close back above the bottom of that range, I'll be looking for a higher low to trade it back to the top. It is well entrenched in this range, and I'm not sure that that's going to change anytime soon. So I'm looking for that to come back in there. Again, CAD week based, or a week CAD based, if you like. The other and final one this week for me is silver. And silver, been following for quite some time now and starting to get a little bit of a handle for it. I like this range on silver. I love the fact that we picked the bottom of it last week and looked to go back to the top. And that exactly happened. We're now coming in the opposite direction, and I'm desperate here for a lower high. So I want price to rally, but not take out the highs, not take out the top of the range. And if I get that this week, a lower high in here somewhere, Tuesday, Wednesday, Thursday, don't care when it is. If I get it, then I'm a seller of silver on the daily chart. That pretty much wraps up my my watch list for the week thus far, Ash. We're very close to TP1 here on the pound by the look of it. Let's hope that can get to where it needs to go.
Well
hey,
done,
you doing,
mate.
bud?
Yeah, doing well, mate. Doing well. Just listening into what you're saying, and many of things I couldn't agree
saw you
more.
laughing.
Well, did you know the only thing I don't agree with you on is silver? Everything else, I'm totally down with you, and I'll show you what I'm looking at, because and I'll do it briefly because George is in the room. So I'll just bring in where's my Zoom gone now?
Happy days.
Oh, there it is. Okay, so
sorry, Ash, just take your time, buddy. Absolutely in no rush. Absolutely
brilliant.
No. Yeah.
Okay, mate. Thank you for that. All right, brilliant stuff. All right, well, I'll see if I can go through it chronologically if I can remember. I've still got these lines on there. So firstly, the Kiwi Swiss, the Aussie Swiss that you were talking about. Couldn't agree more, mate. When I look at this chart, I see a head and shoulders pattern here, and there's the shoulder to the lines, the neckline, and when I come in to measure this, and we're focusing not on the line but the dots leads us right to here. So that suggests to me that this that the head and shoulders has played out, and that would also suggest to me the same as you that this looks like an oversold market just on that fact alone. I'm going to just quickly talk about the FTSE, because the FTSE looks. I've got a whole bunch of trades in the FTSE, but they're all hedged off. The FTSE looks like it didn't manage to break through this level here. Let me just remove this line. This line here last week, it tried to get above that line, it's rejected it. This looks bearish, but again, you know, is it getting to the point where this looks like a buying opportunity? Maybe not so much on the FTSE, but I would definitely say the Nasdaq, very different. You know, the Nasdaq really is right on D-Day line. You know, it really does need to see if it can get a boost from this particular level. Double bottom. Will the double bottom play out? Difficult to know, because if it goes through this level, the next level that I can see on the Nasdaq is probably down here. Maybe pushing into this area, the COVID highs, which, to be fair, has to be said, you know, the way that the market is going right now, it does look more probable than not at this stage. So if we put this line up here, that's the area that I'd be looking for with a Nasdaq to potentially sort of trade that long again, and that level is around about the 10,000 mark. So it looks like a potentially another 10% drop in the Nasdaq, but I quite like it. I mean, what I would say is, if you were a long-term speculator, the Nasdaq's already attractive. You know, we're down over 25% from the highs. Most bear markets are, you know, around about a 25% run to the downside, 25 to 30%. So the Nasdaq looks like an attractive buying opportunity if you're a longer term investor. Is it a tradable opportunity? Possibly, but not yet. I think that's one of the kind of key things here. It's at a level which is interesting. If you were to trade this now, you wouldn't be getting anything on the hourly. You'd be getting nothing on the 15. And the only thing that you might be able to argue is that it's through a level on the 5. Now, because of the huge move to the downside, do you really want to trade a signal of a higher low on a 5-minute chart? I would suggest not. I mean, you could use this level here. Look at that. So it's just about through that particular high there. May well go up to this point, and I think it's interesting that the pivots are sandwiched together here. The daily and the weekly, it does kind of look like it's going to get drawn into that particular level, but difficult to know. And as I say, at this stage, you are kind of like you're banking on the 5-minute chart working out, which, as I say, it could do, but it's come down a long way, and you are relying on a very short-term time frame to take a position here. So not sure whether that would be such a good idea. And it's the same with the FTSE. You know, the FTSE's managed to get a little 5-minute higher high here. Does it create a higher low? Possibly. But then when you start to look at the longer term time frames, the 15. The 15 is not yet through. The hourly is not yet through. And the hourly, really, for me, the hourly needs to break through here to initiate a trade long, which would coincide with this particular level here. Now, I think you might be able to sense that I am looking for long. I am quite interested in long. I do think the market has been, you know, quite aggressively sold off. So I think that we could get something to the upside. Catalyst, and that's sort of like, you know, really where I'll finish up, is the potential catalyst that this could actually go. And the catalyst would probably come from the expectation or the possibility that let me see if I can get my new share on here. The possibility that this CPI number that is released on Thursday, is it? Yeah, the Thursday CPI number isn't quite as bad. That's the only thing that could drive the market higher, to my mind. We've seen unemployment data dropping again, or certainly the labour market in a pretty strong with a pretty strong picture. So because of that, it does suggest that the Fed could go another 75 basis points and possibly keep going. I think we are probably close to where they're going to have to pause. And the market is just waiting for that, which is why I don't think we've seen a collapse. And if the CPI data comes in a little bit weaker, that will probably, prop the market up a little bit. The question is really between now and Wednesday, where's the market going to be? Is it going to try and rally into that number early, or do we maybe get a day like today where market starts to show that we're getting some sort of accumulation, which would be better, and then we're looking really for tomorrow? Or does it start today, or do we have to wait until the data is actually released? So there's lots of questions out there, but it does suggest to me that there's probably a data point which could at least halt the move to the downside at this particular stage. Whether we get an opportunity long is, as I say, another question. Earnings coming from the banks on Friday in the United States. Earnings season is going to be another pivotal aspect to this market, because has what the Fed done started to affect corporates? We know that it's affecting the global growth, but have they made sufficient steps to stop their balance sheets getting too badly affected? And if stocks are managing to hold up, that could also help boost the stock market. If they're able to kind of survive as interest rates go higher, then when interest rates eventually pause or come down, they're going to potentially do very, very well. So there's some dynamics out there that we do need to watch out for. CPI data is the first one, and that's not till Thursday. Earnings season is the next one, and that starts on Friday. Now, finally, I did say I was going to finish with this, but finally, I do think I want to speak about silver as well, because silver to me is an interesting one. And the reason that I think silver is an interesting one is that silver was up 10%, from the lows. Silver's went up 10%, where gold went up 4% and everything else. Both gold and silver, really, gold has outperformed the stock market and cryptocurrencies and everything else so far this year, which I think is pretty good. Considering the situation in the market, it's pretty good. Is there going to be something that enables gold to flip? Now, all gold is waiting for is the 10-year to start showing that the interest rate from the Fed is going to be cooling. That because at the minute the Treasury yield is fighting the potential for gold to go higher. Gold is an inflation hedge, but not really when you've got aggressive central bank action. So gold is waiting for the central bank to get a bit more dovish so it can take off. Same with silver. So I like silver. And what I like about silver is that we missed the initial run because it was so explosive. And we're now back to...
Some of us missed it.
Some of us missed it. I mean, you called it. You did call it. I don't think many people got the opportunity to trade it. But look where we are now. We're not quite at this level yet, but we do see this potential higher low here. So, and this is a big pattern. I mean, this has been going on for 3 or 4 months. So now we're out of this particular range. I wonder whether we could actually start bursting back to the upside, possibly to the top end of the range that you're looking at as well, mate. But I like silver. I think silver's got a decent chance. And if anything is going to start to go to the upside, everything will. If the Fed pivot, everything's going. And you won't be able to grab that opportunity from here if the Fed pivot. What we're waiting for is a hint they could. And I think, again, CPI data on Thursday could be pivotal. I think there could be some positioning going into the number. And if the number is positive for the market, i.e. CPI is coming down, then I think the likes of gold, silver and stocks do very, very well off the back of it.
I notice you're steering clear of Putin and Little Rocket Man and the bridge blowing up. What's he going to do? I mean, I know you don't know. Nobody knows the answer to that question, but you would imagine that he won't react kindly to that bridge being blown up.
No, you're absolutely right, mate. I mean, there are sort of talks and calls for control nuclear explosions. I think the problem is the initial headline comes out and there might be sort of like some kind of market reaction, but it tends to be knee-jerk because these things do take a little while to implement.
Yes, it actually has to happen.
It actually has to happen, or we need to get close to knowing that it is imminent. And until that point, it's very, very difficult. So not to put too fine a point on it, but I do tend to just steer clear of it in shaping what I'm going to do for the day. Because my problem is I wake up and there's a headline and you think the market is going to be somewhere and it's not.
Yep.
And I think the market is quite tired of headlines and things like that. We saw a lot of it a few years ago with Trump. Very reactionary things going on when Trump announced something on Twitter. But as time went on, people started ignoring it. It was just sort of like one of those things that Trump would sort of say something, and you'd think the market would react because it did before, and it didn't. And I wonder whether we're sort of in that kind of environment with Putin, where we're actually waiting for something that does drive the situation, something bigger to happen. Because right now, while he's just kind of pushing his force further into Ukraine, and we're getting these things going on, it's quite a big deal than them taking out the bridge, but they haven't taken it out completely. I mean, it is still functional, and we've got Nord Stream 1 and 2 closed down because of the explosions there. But they're nothing hugely significant at this stage. So I think you're right. We need to be aware that there could be a reaction, but to trade ahead of it is difficult because it's guessing.
Yeah.
It's guessing firstly if there's going to be one, and secondly when it's going to happen.
If and when. Yes, exactly.
Yeah. I mean, we have seen the price of oil pump as well. But off the back of the OPEC Plus meeting, which I found incredibly surprising. I didn't think they were going to be able to absorb quite what they did, but 2 million barrel cut a day from OPEC Plus, which is the biggest since the pandemic, and that has managed to kind of push WTI back above $90, and that seems to be the benchmark price for WTI. Now, of course, this is also probably helping the FTSE out. And last week I was suggesting that we could potentially hedge the FTSE long against the Nasdaq short. And if anybody managed to get involved in that, that's worked out really well. And this is the reason why, because the oil stocks in the FTSE have done well because of what happened with OPEC Plus. But whether this can go much...
Also a technical move. It went straight to the top of the channel.
Yeah, exactly, mate. Yeah, straight to the top of the channel. So,
yep.
And oil is not just about OPEC Plus. Oil is also about the situation in Russia as well. So I think WTI is probably one of the safer places to be. And again, dollar comes down, WTI is going to go as well as everything else. So I think that the oil charts look potentially tradable. If you're looking for easier things to trade, the oil chart looks like a pretty good place to be right now.
We all want those, don't we, George?
Yeah, we want anything that's tradable.
You bet. You're looking fairly dapper there, mate. You're not doing your sporting apparel today. Have you had a business meeting or something?
I'm looking more like a trader, right? Without all my
Well, not the traders I know, mate. Most of them wear t-shirts and underpants.
Baseball caps and
that sort of thing. Yeah.
Oh man, no, good to hear you guys chat and just tell us your perspectives on things.
Well, that's what the show's all about, isn't it, mate? Having a little chat and comparing notes and seeing if we can come up with an answer. Really, at the end of the day. But there's still a lot more questions than answers, I reckon.
Well, there is. Just as far as war is concerned, I know it sounds very base and inhumane. I think I'll only switch on the TV when the nuclear starts, because I'm very bad at keeping track of fundamentals. So. When things
the fundamental, do you know what, George? The interesting thing about the fundamental picture is that it's not really related in the charts right now. I mean, there were so many surprising things that happened last week. Didn't expect the RBA to go as little as they did in a rate hike. So that affected the Aussie. And actually, the Aussie's fundamentals are better than most. But the RBA didn't do what we expected, which was amazing, really. Then we had OPEC Plus coming out and doing something really aggressive, and the United States aren't particularly happy about that. So there's been just a little bit of action which don't necessarily, they're not necessarily reflected in what the fundamental picture is. So actually the fundamentals aren't really helping. I mean, Jeff and I were talking last week about the COT data, and the COT data suggested institutional traders coming well out the CAD. But the CADs, again, I think there was a hawkish announcement from the BOC. And obviously with the price of OPEC Plus really sort of dragged the CAD higher as well. So there's been some surprising things that have happened that weren't in the data, or certainly haven't played out as yet, in regards to the data.
I don't know if you watched the movie The Big Short. Did you watch that movie?
Yeah,
The Big Short?
Love it.
Yeah, everybody watches that. More than
there's that part where he's saying, "Listen, this thing is going up, but someone is to manipulate in the market."
Yeah.
It has to go down.
Yeah.
It's almost like when he's saying, "But what's happening here, isn't it?" So
yeah, absolutely right. Absolutely right. The manipulation that goes on is crazy. I mean, the manipulation probably in gold is broadly known, but the CFTC can't do anything about it. It's just one of those things, and I think it's the same with stocks and everything else. Stocks probably should be a whole bunch lower, but there's obviously sort of forces at work in the background that managed to catch us retail traders out, because they're doing all sorts of jiggery pokery. But you're right, mate. I mean, ultimately the fundamentals will play out, and things will turn. The Aussie, obviously, unless the fundamental picture changes before they do, of course. But the Aussie still looks like a potential buying opportunity. But it weakened a bit this week. There's not so much confidence this week, and the CAD would be a sell, but that also weakened a bit this week. So yeah, I think you're right. Maybe it's just a bit of patience, and we'll see if it can start to turn in our favor visually, as well as what's going on in the data.
So can I try and share my screen?
Yeah, let me throw it over to you.
Of course, mate. You've only waited 25 minutes. Go on.
No problem at all. Okay, I have done something. I'm not sure what I've done now. Where is share screen? All right, let me share this. There you go. I'll open up silver shortly. Ash, you asked me to have a look at it.
Yeah.
I'll put it up shortly. But let me just. So I've got two profiles. I'll put up the other one just now. Let me just talk about the other markets that I'm looking at. So gold, there's a bit of caveat to all the markets. I'm looking to sell, but there's a big but, capital letters underlined, if that makes sense. So if you look at gold, we broke out of this convergent triangle. Now, whenever I see that on any time frame, a converging triangle, or the inverse of it, if it's an expanding triangle, I know it's breakout mode. So in this case, when I see a breakout like that, 75 plus number of times that happens, the market is going to come back and try and test the apex, the breakout point, before it decides whether to make the breakout fail, accelerate up, or do a form of a lower high, double top, and then carry on. So while, when I drill down to the 5 minutes, whatever I see, I'm gonna sell. I'm gonna take rather. My bias is selling, because I think we've broken out of that triangle. Is going to be selling. What I don't know is the test of the apex going to happen today, or are we going to go down, and get to this level here, which was the old low of 2021, which I think the market still has to decisively get out of. at some point that will be tested. It's like when you get a gap in the market, at some point, the market's going to come back and test. We just don't know when. We don't sit and wait for it. We trade. So I'm very bearish on gold and looking for ways to optimize out of that. I mean, last week was good, that when I saw that, I mean, right from that inside pattern, that's a breakout mode. When you get an inside pattern, then you're really just going to say, I don't care what happens, I'm just going to wait for short setups. If they don't come through the whole day, well, it's a pity. But if you did that, you'd have been rewarded quite well with that in mind.
That's an interesting one, mate. Just to give you a little update on COT data, that the gold actually was one of the interesting instruments this week because of the COT data, and the COT data was showing that all of a sudden gold had gone into a percentage change long from the previous week. In fact, we had 3 weeks of down, and slowly the participants are coming back in. The buyers are coming back in. So we've really sort of like seen over the last few weeks that the gold is starting to just show some signs of some strength again.
Is that not also seasonal, Ash? Aren't we coming into
well, not
season?
Really.
No.
To a degree. I mean, yes. The first couple of weeks of this month, the first couple of weeks of October are seasonally long, but after that, gold is pretty negative right the way up until December. So
until Christmas, yeah.
In a way, on a very short-term seasonal aspect, yes, we do see some gold upside, but over the course of a few months, it's actually quite bearish. So the COT data is not really matching that, but much stronger on the COT data. I'm just looking at what the longs. Yeah, the longs actually just started to buy in, and the shorts just cut back on gold last week. So actually cut back quite a lot on gold last week. So we could see a little bit of upside. I mean, remember that's reported from Tuesday, so that was before the unemployment data was released, and I think that there might have been maybe some speculation that the unemployment data was going to help things out a little bit. Now that hasn't happened, maybe that kind of wipes the slate a little bit. But and that's the interesting thing about COT. COT data showed us that the CAD was a sell, but then a few days later was OPEC meeting. So that COT print was a few days before OPEC plus, and it could be that speculators are basically saying, right, we're into this. As long as OPEC plus don't go the way we don't want it to go, and they do, and then then the CAD does change. Could be the same. If we're looking at gold is sort of saying speculators are they're switching positions to long before the unemployment data. Unemployment comes out and it's not very good. COT is kind of wiped out a little bit. So I'm still trying to understand the balance of play a little bit with how COT is then played out with the important piece of data, but we're going to get the COT data this week will be printed before CPI. So if there's more longs in gold and then CPI helps it out, then it could actually induce a pretty nice trend.
Yeah, guys, sorry, George, just a very, very quick one, and I shouldn't mess with this because it's a set play. But I'm moving my stops to entry on the pound. It looks very much like it can't get through the that range, the top of that range. So it's going to go down, in my opinion. So I'm moving stops to entry on that, just to prevent a loss.
Good stuff, mate.
Sorry, George.
Okay. Now I was just about to say, if this kind of pattern on the daily, this appeared on the 5-minute. Then I know I'm definitely going to be selling if this was happening now for the rest of the day, because a couple of things. Whenever I see a channel like this, a bear channel, then I get a failed breakout beneath it and a failed breakout above it. That says to me, with this kind of pattern, if I get a lower high double top here, it just reinforces this lower high double top that I've got, or double top here. Then I'm going to sell to see if we get down here. So the goal will be to see if we get down here, and if you're taking profits, take profits there. If you're managing, then see if we break out beneath that and go for the measured moves. So whatever happens today, we'll take advantage of that. But if I get a pullback, a bull candle, whatever, then definitely could be Tuesday or Wednesday. Any signal here that is a high test and a bear candle, that the following day is just going to be looking for sells, for shorts on gold. Just another one, UK 100. Now, this is another big but. I'm looking to sell, but I mean, if you just look at it, I mean, a new lower high has been created here. We had, if we take this out, let's leave it in there. Let's just draw another one. So, I mean, there really was this effort by the bears here, to contain the market, and they want to just give a very strong breakout beneath, whatever that low was of 2022 and accelerate down. But the bulls managed to turn that very strong candle. But then the bulls, all they needed was to give us a small candle, got an inside candle, outside candle, and an inside candle. This whole pattern here just indicates whatever the driver may be, this is a potential breakout mode. We're going to break out, and the favor of this breakout is towards the bears. And then the big but comes. I mean, inside candle, bears have stopped the bullish momentum. Outside candle, bulls tried to go up, bears came in. But why did the bears allow even the smallest of bull bodies? So everything is in their favor. But if you're going to sell here, then you're going to have to make sure, if you're trading on the daily, your stop is way up there. On the 5 minutes, the best thing to do is just wait out today. I mean, even the market sells off like it did earlier on. The fact that we have this bull body, likely market's likely to come back and test this new channel line or test off the 20. A signal will come of sorts, but today I wouldn't be even bothering looking at the UK 100 as of now. So that's one of the bearish but big but. So just gonna have to wait a little bit.
Can I call your analysis the Beyonce analysis today, mate, please?
Explain that, the big but.
Big but.
Big but.
I think you must do that. Today is one of those,
It's a Beyonce day. I got it.
Yeah, and actually, so that's a good point. What does it mean if you got big but trading range, right? So we can expect indecision in the market.
Yeah.
And so just wait for clarity.
I actually don't mind, and I think I might use this in future now that you brought it up. I don't mind big but days. And the reason for that is if you can find a position that says to you, if this happens, okay, it doesn't matter. But if Y happens, so if X happens, I don't care. But if Y happens, I'm going to make money of it. So I'm not an issue with, I don't have an issue with that at all. If you can work out how you can use the but part as the profit making.
Right.
Does that make sense?
It does. It does fully.
That kind of describes the way I trade anyway. It's kind of if X happens, well and good, I don't care. But if it doesn't happen and Y does, then I can make money out of that.
Well, I mean, I like that. Let me, my favorite, Hang Seng 50. You see, I mean, that's gap down, bear candle so far on the daily. But, I was up bright and early because this market rewards me quite well. But I'm very clear about the patterns and strategies that I look for and that I trade. And none of it's set up. So, by the time I go through to the 4th, 5th candle, I said, oh, nothing is setting up, don't worry about it. And if you just look at the candle, you said, oh, well, I could have sold anyone here and made money. But that's none of my strategies. That's the way that I trade. So I just look at it and say, well, good lesson. Doesn't fit into, I've got 9 things that I look for, 9 strategies, if you like, it barely fits into anything, even the more complex patterns. So I let it go, even though the setup, when you look at the daily reason I was up, I looked at that and I said, man, look at the last 3 candles. We came off the 20 EMA inside pattern, breakout, fantastic. You got to go and find ways to sell this market. And I didn't get it. It doesn't mean I'm done for the day. I'll just keep popping back to it, because if it comes back and starts to test some of these levels, this was the old gap level, or comes back to test the open, or comes back to the high of Friday, something will set up in which then I can trade comfortably within my.
I think that's really interesting, Georgia, and actually really important, isn't it? That all of us really, and anybody new to trading just needs to get something they can trust. Because as you say, you might read the market and pick the correct direction, but if you don't have the setup that you've traded and you can trust, you've tested it and you can trust it, that over the long term it works out, then you're not there yet. And that's the sort of like the point where you kind of like make the step into the trading world where you can make money, is that when you've got a setup that you've tested, or that you've traded a lot and you can trust, and you're trading it. And that's what you're waiting for, and everything else you just ignore, because you don't need to trade every move, but you've got to trade every time that your setup's there, because that's what makes the money. That's what that's what kind of puts food on the plate. So it's really important, and I'd be interested to know, with people in the room, how many of you've got a setup that you can trust? How many of you are there now where you've got a setup you can trust, or how many of you still feel that you are a little bit lost, because you haven't really sort of managed to grab the things that you that you are looking for?
I should add to what I said, because you think I'm nuts if I don't. You've got to have a binary situation for what I've just said. It can't be a range that's moving 15 pips, for a whole day or a whole 2 days or whatever the case may be. You've got to have a situation where, what I just said, if it's not doing X, it's going to do Y.
Yeah,
I've got to have a setup to do that.
Yeah.
I'm not saying, okay, if it doesn't break low, then it's going to break high. What I am saying is, if my setup doesn't work, then it's going to go in the opposite direction.
Yeah.
So it has to be a binary situation. It has to be either that or that. It doesn't have to be a range in mid-range and all over the place. So don't get me wrong. It's not a case of, okay, if it doesn't go short, it's going long. That is the case sometimes, but it has to be in a binary situation. In other words, if you've got let's talk about what's his name, Putin at the moment. To me, that's the entire market is binary based on what he does. So if he reacts to that bridge blowing up, then certain things are going to happen. Oil's going to go up, potentially gold will, stock market will crash, blah, 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 blah. But if he doesn't, then things will just bubble along as they normally will, and technical levels will take over, etc., etc., etc. So
yeah,
I have to have that binary situation where if X happens, well and good, but if X doesn't happen, then Y will. And it's not there all the time, certainly not there all the time. So sorry, I misled when I was talking about that before. It's not a fait accompli, if you like. It has to be a binary situation.
Yeah, for sure.
I mean, that also helps with capital allocation, capital management. I mean, on last week, Friday, I think. I mean, the first 4 trades I took were losses, but the patterns that set up, the way it says, so what you do, you keep trading for the day, and it ended up being, a very good day, because that's it. If nothing else had set up in a downward fall for the day, it's fine. That's, because those patterns will, over 100 trades, they will work in your favor. And
that. That's right.
Yeah.
And if you know that, you back that. Simple.
that's it, I'm just going to put up this profile with silver and gold. I've never traded silver in my whole life, so I'm really just enjoying analyzing it. You've probably covered this at some point, but just on the monthly, I mean, you got the all-time high, all-time low down there, etc. But this level here, what is a 21.3 level, is a key level since 2008. Here, broke out above it, we came back, trading range, lower high double top, tested it, broke above it, and that's kind of where the market is at the present moment. And I think the reason it's become significant, if you just look at this, just this dotted line here, the blue line, that's the 50% midpoint of the all-time range. So from the all-time high to all-time low, that's the midpoint. That's where this wedge top, double top, lower high, another lower high is taking place, and we're trying to come off that. That's what the bears have been defending, that level, that 50% level. So that this is on the monthly. So just looking at probably the higher time frame forces that are driving the market, I think the bears are very strong, and they are trying to push the market all the way down. They should be able to get past this and get down here where the threat of a potential double bottom starts to come in. So just to pull it down to the daily, see it a little bit clearer on. So there is that 50% midpoint all-time high, that blue dotted line. There is the present high of 2022, and we are here. So coming from this is June, right? Coming out of June, lower high double top. Okay, I mean, that wedge top there was the first lower high to that. So August, the bears created that wedge top. Bulls tried to break out above it, they failed, and they're bouncing off that key level since 2008. That the market seems to have just bounced off. So if I was trading this now, I'll just be waiting for possibly a lower high of sorts, a double top, and looking to sell. I wouldn't sell here. I mean, if you're gonna sell here, like I said to you guys, if you wanna sell here, you gotta be prepared before you see anything else to put a measured move stop. So I wouldn't be comfortable in any time frame to take a trade here and put a measured move up here. But when I get the market pulling back, and if I get a lower high, decent enough signal candle, then it's a tighter stop, and you can look to sell all the way down here. Would I buy here? I wouldn't buy here, even if I got a decent low test candle today, because of just this level that we've got here. So probably waiting a couple more days to see what we get lower high, then looking for longs, for shorts.
I know you probably won't, but if you look at the replay of what I was talking about on silver earlier, George, you're a ventriloquist. That's exactly what I was saying. That's exactly my analysis on silver at the moment. Yeah. Do nothing right now, but if you get that lower high, it's a sell.
Excellent. Yeah.
Interesting.
So it's a waiting game. I'm just looking at my charts to see if anything interesting is setting up. Let me just before I go, let's show you one. Let's go back to German 30 is something that I'm looking at.
And that pound trade is closed, by the way, guys. As I said, at break even.
Hold on, mate. I think it's my FTSE's just turned negative, a little bit negative as well. So I think we're going to get a tough day for any bulls out there, and it doesn't suggest we should be trading if we're looking for longs.
That's
like
actually,
I said, I don't want to mess with that setup on the pound, but when I look at the chart and I see disaster looming, I have to act. So,
yeah, agreed.
It kind of correlates with this. So, I mean, on German 30, and I'm sure it will be the same elsewhere, I'm looking for shorts. And the reason I'm looking for shorts now, there's the daily breakout. I'm looking for a follow through. That looks like it's been the pullback already where we are in terms of the bulls controlling the market. But when I go down to the 5 minutes, it's starting to kind of I'm going to pay close attention to. So that previous high or that previous lower high and the low we had, low of the day when the markets opened, all we've tested is a measured move of this breakout beneath the low of yesterday. And when I see this kind of pattern forming at this resistance, these measured moves are just invisible levels of resistance, but they are there. Then I start to get very interested. So some form of, you can call it a double top, went up and again, or a 3 push pattern, wedge 1, 2, 3. But what I want to see just from the bears is at least a close beneath the 10 EMA. If they can close beneath that, then they've broken the momentum, that bullish momentum. Then out of that, I want to look for lower highs. And if I get that, maybe here, maybe down here, then I'm looking to sell. If the close is down here and the lower high is somewhere within very close to low of yesterday, I would comfortably wait for the breakout beneath it. And then we see if I get a retest of these levels. It may happen in this session or the US session, doesn't matter. But so far now, I've got my bearish cap, just looking for setups. This is probably the earliest one I'm looking for. And everything else will pick up as I go. So I thought I'll just point that out before we go.
Yeah. Yeah, I mean, all equities are in a lot of trouble. And I suppose the thing is with the DAX and the CAC as well, is that now the ECB are getting more aggressive. They inevitably are struggling. And this is the other interesting thing about the FTSE, you know, aside from the oil situation with the FTSE, it's got a central bank which is nowhere near as hawkish as the others, which again makes it a good hedge. You know, it's a pretty good hedge against a lot of these other markets right now. But nothing is looking particularly attractive for the buy side. So I think we're in that situation, aren't we?
Yeah, look, when I'm saying buy Euro CAD, something's not right, because that just doesn't make sense. That doesn't ring in my brain. It's going, that's ridiculous. Don't say stupid things like that. But the technical setup's there for me, you know. And it's like I said before, if trend, momentum, and fundamentals actually mean anything, then EuroCAD continues to go down. But if the technical chart means something, and this is the binary situation that I'm talking about, it's a buy, but it's not a buy at this level. It's a buy if it gets to the level I spoke about before.
Yeah.
So that's the trade-off that I make all the time.
Yeah, be careful out there.
Says it goes short, but
I think
this level here tells me go long.
Everybody needs to be quite careful today, because the market's looking bearish, but it's looking quite slow. You know, it's not frantic, and I think that we often associate bearish moves with volatility, and the volatility is not really there. It looks like the market is tired. It looks like it would like to get something just a bit more positive. And it might be one of those things that just drifts to the downside, and you know that there is money out there to be made. But I would suggest that everybody needs to be just a little bit careful to get too comfortable with the downside. But also, there's nothing to the upside. So you know, if you are going short, then be aware that the market just appears like it wants to turn, but it's just got no reason to yet. So I think shorter term time frames is probably quite wise. For one right now, I'm not really interested. I mean, last week, Jeff, you and I were talking about the move being this week. And actually it happened Thursday, Friday, which if anybody was in front of the charts, you would have been able to take advantage of that because you never really know. I think we were both anticipating maybe a few more days, but that jobs data really did jolt things around. But now we're in the situation where we got more data on Thursday. And, you know, again, a risk of sort of maybe confusing people. I don't think there's going to be anything significant today which gets us into a trade. But same as what we said last week, anticipating this week to be the movement, but you've got to be aware that if things change and the charts change, then trade it. You know, you've kind of got to get involved. But I'd be very careful with trading today. I think it's I'm not saying don't trade necessarily, but at this stage, it looks like it's going to be a tricky market with just a lack of volatility and a lack of liquidity.
I'm of the opinion that there's going to be opportunities maybe on Wednesday for me, because what I'm seeing at the moment in those pairs I spoke about earlier, Aussie, Swiss, Kiwi, CAD, that have broken their range. Now's the time to look out for those, because if they don't go through with that breakout, which I believe they won't, and they come back inside the range, then you're going to get an opportunity to trade it back to the top of that range. In particular, on Kiwi CAD, I think that looks reasonable. If it goes, it goes. But if it comes back into that range, then I think you're going to have opportunities to trade it. We shall see.
Yeah, that's great. Well, we're at the top of the hour. I think it's been decent. Thank you so much, George, as always. Really interesting stuff. Unless you got anything else you wanted to add, Jeff? Any more charts to look at?
Oh, mate, look, I'm looking at the euro versus the dollar as I always do, because I think it's just if you're talking small time frames, it's the go-to, in my humble opinion. And George will bring that up, I'm pretty sure. And once again, I've seen that break down the current range on the 30-minute chart. And we've got an untested daily pivot above us. We didn't test the daily pivot on Friday, haven't tested the daily pivot so far today. So I'll be looking for that to take place at some stage. Getting a setup for that right now doesn't look too fancy, I've got to say. But what chart's that, George?
This is 5 minute, and yeah, I mean that strong bear breakout for me is good out of this trading range. Although it's just, I think we just got into the measured move of it. Okay, so the bears breaking out, that's kind of where they wanted to go. Now, what remains for me, if the bears are strong, then we're going to get some kind of a pullback, either to test the breakout here, which will be super prime, get a double top here, then keep on selling. But if the bears are not strong and the bulls break out of here and give us a double bottom, then it's going to be a lower high. Again, either the double bottom down here or the double top test of here is going to give us the opportunity.
Yep, I think the only direction I'd be looking to trade that is long, but you'd want to have a pretty gilt-edged setup to do it. You have to be fairly brave. The thing about that, of course, is it's an upside-down version of the dollar index, and the dollar index is still skyrocketing, but it's still struggling to get through the 113 handle. And big bearish bar last week on the dollar index. Sorry, the week before on the dollar index. Had a recovery last week, but it didn't take out that 113 level, which is interesting. It's trying to get through it today. And that's why you're seeing the euro versus the dollar try and break out to the downside. I would still be of the opinion that if you do get that signal to trade it up to the daily pivot, which is, you haven't got it on your chart, the level is 97.61. If you do get the opportunity to trade that off a setup, not just because I say it's got to be a setup, then I think that would be the way I'd want to go today. RTM, reversion to the mean.
Good stuff. Well, let's come back Thursday, guys. Thanks, as I say, George. Really appreciate it, and the guys in the room. Maybe guys in the room as well. You know, if you are sort of still a little bit confused about what you are doing, then just reach out to us, because you know we are here to help if we can. I mean, it might be so far away from the strategies that you're trading that we can't, but we might be able to point you in the right direction of helping to see how you can kind of tidy up what you're doing. So have a think on Thursday if you want to either come on air or send us a message, and we'll be more than happy to see if we can look through some stuff. But thanks to you, Jeff, as always, to being my trading buddy, and to George for being Monday's trading buddy. Thank you to Marlon for looking after us, and we will see you on Thursday, right?
Okay, and let's hope it's not a Beyonce day.
Let's hope so.
Well, you know, if the guys want more Beyonce, this Wednesday is the second Wednesday of the month, so you know, the
big day,
4 hours, big day, and 3 opening sessions: Hang Seng 50, UK 100, and US Open. Just split nicely into 1.5 hour sessions. So
where do we see that, George? What times?
So 9:15 Sing for the Hang Seng Open, and the UK Open is the same time slot, which would be 1500, and then the US Open will be 7:30 p.m.
That's great, man. Will you go through some chart patterns and things that you look for to take advantage of?
Yes. So we look at the market live. If anything sets up, we go through it. But then, you know, I pull a lot of stuff out of my thousands of PowerPoint slides and explain the patterns and stories that I look for. So it's part trading, part educational, if you like.
Brilliant.
But showing that my actual strategies, yeah. So
Sounds
anyone
amazing.
can see you then. Thank
Jump
you,
on that, guys. Thank you, George. Thank you, Ash, for being my trading buddy, of course, and thank you guys for joining in and being our trading buddies for this Monday. As I say, it's the 10th of October. My goodness gracious. Christmas bells are in the air. I can see it.
Oh,
yeah. That'll be buy gold. Talk
yes.
about that.
Yeah. Get to December.
Not too far away. Have a great week ahead, everybody, and we'll look forward to catching up on Wednesday with George, and then back with Ash and myself on Thursday. Have a great week. Bye-bye for now. See ya.